US stock market seems to be edging higher since our last report, also possibly supported by the improved market sentiment. In today's report, we would like to address what fundamentally seems to be driving them, yet also have a look at Apple and Tesla regarding their problems and prospects. We conclude our report with a technical analysis of Nasdaq's daily chart. US stock markets, as noted before, maintain an upward mobility since the start of the week. The easing of market worries for the Middle East tended to allow for a more risk-oriented market approach. Yet the elephant in the room tends to remain the sticky inflation in the US economy and the Fed's intentions. We see the case for the persistence of inflationary pressures to add more pressure on the Fed to keep rates high for longer, and such a scenario may weigh on US stock markets. Hence, we note the release of the Core PCE price index for March on Friday as the next big test. Should the rates fail to substantially slow down, we may see market worries for the Fed intensifying and thus weighing on US stock markets. Also, we highlight the release of the preliminary US GDP advance rate for Q1 on Thursday as a possible market mover for US equities. We are forced to discuss Tesla once again after last week's report, as the problems for Tesla seems to be multiplying. We make a start with reports mentioning that China's BYD overtook Tesla as the world's largest EV manufacturer. Given the opportunity, we also note that headlines stress the gutting of Tesla's newly formed marketing team in a possible reversal of the marketing strategy of the company, despite investors reportedly asking for more focus on distribution. Furthermore, we also note that Tesla's earnings report was even worse than expected, yet Elon Musk highlighted the potential of AI and driverless cars to be produced in the future. The company also intends to present cars with lower cost, and the talk of new offerings on a faster timeline supported Tesla's shares, with their price rising substantially. Apple's share price got a boost yesterday as the company announced the spring event for May 7th. It was not mentioned what the event is to be about, yet media highlight the possibility that Apple may present new iPads. Rumors tend to mention that the possibility of OLED screens and a movement of the front camera to the side. Also the possibility of a new Apple Pencil and updated Magic Keyboard accessories that would give iPad Pro owners a more laptop-like feel, according to The Verge. The event tends to boost the optimism of Apple shareholders, yet we tend to maintain some worries for the iPhone maker. There is intense competition in China, and Bloomberg yesterday reported that China's iPhone sales dived 19% in the worst quarter since 2020. Overall, we tend to worry for Apple losing ground, as that may limit revenue for the company further given China's critical mass. Nasdaq failed to clearly break the 17,160 support line on Friday, and on Monday moved decisively higher. We note that the upward movement of the index, yet for the time being we are still not convinced for a full bullish outlook of Nasdaq. We also tend to note that the RSI indicator bounced on the reading of 30 and is currently moving towards the reading of 50, which in turn may imply that the market's bearishness is fading away. Should a sideways motion prevail, we may see the index confining its price action between the 17,800 resistance line and the 17,160 support line. For a bullish outlook, we would require the index to clearly break the 17,800 resistance line and continue higher, setting its sights on the 18,500 resistance barrier that is also a record high level for Nasdaq. Should the bears take over, we may see the index breaking the 17,160 support line and aiming for the 16,300 support level. Thank you for tuning in to our financial report today. Until our next update, from all of us here at IronFX, we wish you a solid trading.